Is Baidu stock ticker BIDU a good stock to buy now? Welcome to Global Value. In today's video, we're performing a fundamental analysis of Baidu using Warren Buffett's investing framework. We'll look at 6 key financial metrics before we figure out 3 different fair values to understand what Baidu's worth in today's stock market. Plus, I'll share a special bonus that could be the deciding safety factor when adding Baidu stock to your portfolio. Right now, Baidu trades for $90.32 per share. In its last day of trading, it's up 1.06%. Since December of 2023, Baidu stock is down 20%, which lags the S&P 500 that's up 25% at the same time. In the last 5 years, it's a similar story with Baidu being down 35%. In the past decade, they've also underperformed the market, down 61% at this time. But when we go back to Baidu's IPO when they were publicly listed 19 years ago, the stock's actually compounded at 14.5% annually. This means that despite a recent decade of underperformance, Baidu's actually beat the market in the past 2 decades. Today, Baidu stock trades $30 below its 52-week high, and they're trading $11 above their 52-week low. They're the largest search engine company in China, and they have a $31 billion market cap. Starting with our first metric, we want Baidu's average returns on capital to be above 14%. A normal business earns around 7% returns here, and we can see that Baidu's increased their returns from 2.7% in 2019 to 6.25% in 2023. While these are increasing, however, Baidu's returns on capital average around 4.5% over this time. That's less than a normal business and well below the benchmark we wanted. Unfortunately, this is an X to start things off for Baidu. But now, what does the company really do? Baidu is the largest internet search engine in China with over 50% of search engine market share. The company generates around 72% of its revenue from online marketing services through its search engine. Baidu is a tech-driven company, and its other major growth initiatives are artificial intelligence cloud, video streaming services, voice recognition technology, and autonomous driving. The company was founded in 2000 and it's headquartered in Beijing, China. Next, in our second metric, we're looking for growth in their business. We want to see sales, earnings, and cash flow growth in the past 5 years. During this time, Baidu's grown their sales by 25%. Their earnings are also up after taking a $1 billion investment loss in 2019. However, their cash flows, which have been positive in all 5 years, are down 10%, including their last 12 months. Because their cash flows are down, this is another X on our second metric. Despite a rough start, why don't we learn which super investors own Baidu? Today, Baidu's in the portfolio of 3 different super investors, and this is easily led by Michael Burry, where it makes up 16% of his Cyan asset management portfolio. David Tepper, another noted Chinese bull, has a 2.2% position, and it's also owned by Tweety Brown. Notably for Burry, it's been one of his favorite stocks in 2024. He's bought it in all 3 quarters and added 6.34% to his portfolio last quarter alone. Next, in metric number 3, let's look at Baidu from the perspective of an individual shareholder. Here we want earnings per share growth. Baidu's grown their earnings per share over this time, even when we include their $1 billion loss in 2019. They've also only diluted existing shareholders by about 1%, so this means that it's actually our first check here on metric number 3. Metric 4 is similar but even more important. We want free cash flow per share growth. Baidu was growing their cash flows over this time, and it certainly seems to have increased from 2019 until 2023. However, in their last 12 months, their cash flows are down 10% from where they were at in 2019. On top of this, with a small amount of shareholder dilution, their cash flows per share are actually down. This is an X on metric number 4. So far through 4 metrics, we have 1 check and 3 X's. But as we keep going in our analysis, you'll start to see why super investors like this business. One thing Warren Buffett looks for is companies that don't use a lot of debt, and Baidu fits this. In fact, they've had a net cash position in each of the last 5 years, which means they're left over with a big cash cushion on their balance sheet. In our 5th metric, we want their net debt to be below the sum of their free cash flows. And Baidu ended 2023 with $15 billion worth of net cash. At the same time, they brought in nearly $15 billion of free cash flow. This indicates that they're in a strong financial position, both being cash flow positive and having this big cash cushion. It's worth noting they've cut this cash cushion in half just year to date in 2024, but it's still a solid position nonetheless. This is another big check on metric number 5. Now, this is more of a long-term view. Why don't we look at the short term for Baidu as well? As our safety metric, we want Baidu's current ratio to be greater than 1.5 times. This is a key measure of short-term liquidity that Warren Buffett's teacher Ben Graham wanted to see from the companies that he was investing in. Baidu's been well above this mark in each of the last 5 years, and that's also the case today where they still have above a 2 times current ratio. That's great, and it seems the company's healthy both short and long term when looking at their balance sheet. This is another key check on our safety bonus. Now, what is Baidu worth? The big metric of them all, metric number 6, is also our first of 3 valuations today. We want Baidu's average returns on capital divided by their enterprise value to give us a yield above 5%. This would be attractive compared to the 10-year treasury and could potentially give some margin of safety. Right now, Baidu has a $27 billion enterprise value. In the last 5 years, we learned they brought in around $2.7 billion in an average year over this time. That divided by their enterprise value gives Baidu a 10% average 5-year free cash flow yield. In the last 3 years, they bring in $3 billion of free cash flow in an average year and have an 11% free cash flow yield. And even in their last 12 months, they brought in $2.85 billion worth of cash flow. This is good enough for a 10.5% current free cash flow yield. All 3 of those are more than double the benchmark we're looking for, and it's a major reason why super investors are interested in the company. This is a huge check on metric number 6 for Baidu. Don't just run out and go buy the business. We still have 2 more ways of looking at the company before we give them their final fair value at the end of the video. Next, we'll give Baidu credit for its growth. We'll take an average of their free cash flows and then use historical assumptions to grow them into the future. These are estimates, so it's up to you to do your own homework here and see if they apply to Baidu. This may not be super accurate due to the low predictability of this company in the past decade. However, let's assume Baidu grows their cash flows at 5% annually for the next decade. Then in the following decade, we'll assume that these slow down and they grow at 4% annually. Then we'll even add in their tangible book value to estimate their net worth. If we were looking for a market-beating 15% rate of return, which is the same return Warren Buffett wants, then based on this DCF valuation from today's multiples, it looks like a fair value could be as much as $171 per share. Our third valuation uses their GF value, which accounts for historical multiples and analyst estimates of their future. Today, this comes in at $121 per share, which is up more than $30 from their current stock price. Now, Warren Buffett likes numbers, but it's the qualities of a company that are his true love. Why don't we learn what these are for Baidu through a long and a short thesis? We'll start with the long thesis first. Number 1, Baidu is strengthening its mobile ecosystem with search, live streaming, and mini programs. This helps them to create a closed-loop experience for users to acquire information and make transactions. Number 2, Baidu's a leader in AI with autonomous driving in terms of numbers of miles tested and the number of driving licenses in China. This could become another major growth catalyst. And number 3, sitting on a cash pile of over 100 billion Chinese yuan, Baidu has ample dry powder to invest in technology, particularly in AI, as well as merger and acquisition opportunities. However, things aren't all positives. Let's look at a short thesis as well. Number 1, Alibaba, Tencent, ByteDance, and Kaohsiung and other social media platforms are competing in terms of advertising budgets. This could result in slower growth in revenues for Baidu's search engine. Number 2, despite numerous growth initiatives, there's great uncertainty whether these new businesses can be monetized successfully on a massive scale. Failure to do so would result in a heavy drag on Baidu's margins. And number 3, Baidu's leadership and brand in search have been weakened by more competition entering the market. This could also be affected by future regulatory risks. Now it's time to put everything together for Baidu. In our look at Baidu's fundamental numbers, we learned the company goes 3 for 6 on the Select 6 analysis. They trade potentially very attractively compared to their cash flow numbers and look good on both a short and long-term view of their balance sheet. The company's grown their sales and their earnings in the last 5 years, however their cash flows, which have still been positive, are down slightly. The big drag on the company is that they earn below average returns on capital, which means things haven't been that efficient for the business in this time. Remember, this analysis isn't financial advice and it's not a buy or sell recommendation of any security. There are risks with any stock, particularly those that are headquartered overseas. Still, when we put everything together for Baidu, today it looks like a fair value for the company comes in as high as $167 per share. Remember, fair values are range on either side of this, but that's up significantly from their $91 stock price. If you're enjoying the video and you want to support the channel, you can do so absolutely for free by clicking the first link in the description. That'll take you to Interactive Brokers' Global Values affiliate where you can learn more about their offerings.